Well, China-Africa trade has grown from about $10 billion in the year 2000 to $200 billion this year. It's an annual growth rate of about 30% over the last decade. This is The Moneymakers. I'm Bruce Whitfield, and I'm joined by Dr Martyn Davies, who's Managing Director of Emerging Markets and Africa at Deloitte, to ascertain why Chinese investment lags in Africa, if indeed Africa is such an important trading partner. President Xi Jinping in South Africa and visiting Zimbabwe, of all places, this week. The interest is alive and well.
Well, the interest is there. I think Zimbabwe is a case in point like Venezuela.
Is he going to do debt collection?
I think he is. China's been arguably financing the lunacy in recent years in economies like Venezuela, in economies like Zimbabwe, perhaps arguably even Angola. And I'm afraid the commodity cycle has turned. Prices are half price or arguably normalized price. And a lot of these commercial transactions, these loans, have been underwritten by commodities. How exposed are African economies or the African continent to debt to China? Nobody really knows. But I think it's a significant level and something which certainly will be on the Chinese agenda the next couple of days here in Johannesburg during the FOCAC summit.
Yeah, I love the FOCAC summit. It's where some 30 African leaders are scheduled to arrive and have these tough conversations, because China has been funding lots of development, lots of growth, and has been providing loans in a sustainable or unsustainable way. Sustainable at $100 oil, not sustainable at $40 oil, perhaps.
Correct. I think it's, for me, Bruce, the headline here is China being disruptive for Africa or enabling for Africa because of the supply side, supply of capital, big ticket items, infrastructure transactions that we know all about that the last 10, 12 years or so. Or is China being disruptive or enabling of Africa's development because of the demand side? I think resource demand, very inflationary on commodities. And I'd argue the latter. I think there's too much geopolitical rhetoric and too much exaggeration, perhaps, of the impact of capital coming in. We have a real story, at least from 2000 roughly to 2012, when the sort of peak of the commodity super cycle was reached and started to rapidly subside, the China-driven commodity super cycle. I think that period of created was a golden decade, if you will, driven by China. And we have this alignment of China's resource-intensive growth model with China, with Africa's developmental requirements, at least quantitative development.
It doesn't mean, though, that mistakes weren't made.
A lot of mistakes have been made.
What are the big ones?
I think, again, it's changed quite rapidly, but it hasn't been visible yet in the last 2 years of a relatively new Chinese government under President Xi Jinping compared to the previous government. There's this false sense, and we talk about Zimbabwe, that somehow Chinese capital plays by different rules. It has in recent years. The risk, the perception, the calculation of risk is somewhat different. After all, it's state capital, and state capital does play by different rules, and I would argue, using your word, perhaps unsustainable rules.
Although ultra long-term rules. I mean, you've always taught us that the Chinese don't play 5-day tests; they play test series, and it's a bit like the Ashes. It goes over decades, doesn't it?
It is. I think the challenge for the Chinese is that if China Incorporated was a Premier League soccer team, they'd win every home game, but perhaps lose every away game. And the Chinese play a very strong home game in the domestic economy. But I'm afraid these mistakes you mentioned, it's not just Africa, but again, it's state capital, and ultimately state capital, to have viable, sustainable projects, it must be profitable return in a reasonable period.
Now, African economies without a debt burden have got problems enough of their own. They've got growing, increasingly demanding populations who've been promised an awful lot with $100 oil, $2,000 platinum, $1,500 gold. They've been made lots of promises. Suddenly, governments are changing, commodity prices are low and look to be suppressed for a period of time. Do local people sort of feel shortchanged by this?
I think it's characterization largely of sort of central Western Africa, for oil-propelled economies, what I call the hand-to-mouth economies, effectively. What we're seeing now is strong, still very robust growth, 6-7% plus. Ethiopia is the world's fastest-growing economy, resource poor beyond agriculture in our continent and beyond. We're seeing dramatic, astonishing, seemingly reforms. State reforms in Tanzania in recent weeks. Kenya started to fix corruption, but still growing 6.5%. So that's I think there's a distinct difference in the Africa story. China's engagement with Africa, I think, is shifting to reflect these new realities, shifting away from the oil-propelled, unsustainable, triple-digit oil, speculation-driven price West African economies toward East Africa. Think Egypt, think Ethiopia, with a manufacturing story from China's coming in. Think Kenya, think Tanzania, think Mozambique. That's where I'm seeing Chinese capital really start to focus.
What is the consequence then for those West African economies? They're sitting with low commodities, they're with demanding populations and debt, and the Chinese sitting on the doorstep going, it's time to pay back.
President Dos Santos of Angola was in Beijing 5-6 weeks ago, again leading up to this summit, renegotiating, pushing our maturity dates of repayment of that debt, looking to extend the servicing of that debt, the tune of, I've been told, $15 billion. An extra $6 billion of financing was given. Where's the end game for these economies? We focus predominantly on Angola, Nigeria, for obvious reasons. The third and first, arguably, largest economies at headline GDP growth, GDP level in our continent. What about the smaller countries? What about Equatorial Guinea, Gabon, the small Congo, Brazzaville, the smaller, far smaller market, and even as oil-dependent, single commodity-dependent economies in the region. Never mind the smaller economies, which, I mean, Nigeria's comparative advantage effectively is demographics. We're seeing some good indications on budget spend moving forward, move towards capex rather than just continuous opex sort of spend under Buhari. But what is the future of West Africa? I think short to medium term, this is deeply concerning. It's a very, very painful correction.
So do we have, to use the economist terminology, do we have Africa flatlining in West Africa and Africa rising then in the East?
I think so. I think Africa rising, it's, as Michael Power said, very, very, very true, is that the rise of the Indonesian economy and in East Africa, I would argue, as being sort of a gravitational center of growth of the continent has rapidly shifted east. And also the pull of the market, I think Asia, near Asia, Far East Asia, is almost pulling that from Egypt down to Mozambique, arguably. That's 350, 400 million people, almost pulling them out of the continent. Africa's integrating just with somewhere else.
Yeah, and it's so interesting to see what is traditionally the poorer side of the African continent actually finding its mojo.
Poorer, seemingly, because it's resource poor. But ultimately, Asia succeeded not because of resources. Poor on the surface, but the real
it's obliged
resource,
to think differently about how it structures its
correct,
economy.
and that drives innovation, because otherwise, if again, you're not a hand-to-mouth economy. If you're oil-propelled, if you have a commodity-driven economy, if you're a Zambia or DRC, a single commodity-driven economy, there's an over-reliance of that. You have Dutch disease, but you also have, most importantly, complacency.
And South Africa, a classic example. You talk about complacency. South Africa is delightfully complacent about its role not only on the African continent, but its importance in the world. Because, hey, we're South Africa. We're the home of Nelson Mandela. Oh dear, that story is wearing a bit thin, and we've got nothing else to offer.
Arguably yes, but linking this to the China story again, is the China-driven commodity supercycle peaked and tapered off significantly in Q4 2012 when that last stimulus spend of $600 billion went through the system in China from Q1 2009. In 3 odd years it was spent, 3.5 years it was spent. And I think China is, we believe in the convergence story. There's no evidence, however, of emerging market, developing world convergence with the developed world, ex-China. Take China out of that story. The convergence story is a China story, effectively. And what this China has been a real game changer in every possible way. The growth phenomenon is unprecedented. The resource-intensive nature is unprecedented. The creation of a embedded middle-class-driven economy, i.e., crisis-resistant, in China is unprecedented, considering the size of the country. Now, while this was taking place, obviously it masked the structural deficiencies in many recipient economies. Think South Africa, think Brazil. We are exhibit A's. And now I'm afraid it's a lethal combination of both cyclical downturn exposing structural impediments. So it's both structural and it's cyclical.
What are the conversations then between President Jacob Zuma and President Xi Jinping? What are those conversations about?
I think the first sort of conversation for me which should be taking place is we should all be, as African states, obsessed with China's own growth outlook. So my first question to President Xi Jinping would be, what stimulus measures do you have in place? Maybe no longer big bang stimulus, but perhaps stimulus through acupuncture. What are you doing, and what implications will that have from a commodity supply perspective? And that's a crucial question for this part of the world. However, I think the main theme of the conversation will be around industrialization. Again, this is not an Africa story, this is an East Africa story. I think in our case we're unique. We don't need industrializing in this country, we need reindustrializing. It's quite ironic that over the last 20 years, arguably, the China price, or more accurately, the Asia price through trade, has been hollowing out industry or preventing industrialization in this part of the world.
Yeah.
That's a major contributing factor. And now 20 years later, we're looking to China to be almost the savior of industrialization because of Lewis turning point, rising wage, cost of production pressures in China, and the offshoring of that manufacturing. And maybe that manufacturing will be coming into Africa. Some bottom end, low end stuff is coming to Ethiopia predominantly, but into Kenya, a little bit in Tanzania, Mauritius. But it's nothing like what is taking place in Southeast Asia.
But that relationship, that crucial China-South Africa relationship, it's precious to us. We need to look after it.
In December 2010, we lobbied Beijing to be included into the BRICS grouping. BRICS, the wind of the sails of BRICS is clearly no longer there, considering what we mentioned about sort of the likes of Russia, South Africa, Brazil, China rebalancing, recalibrating growth. Still robust and nothing to be too worried about. Geopolitically, it's important. I don't know, perhaps in foreign policy terms we've overshot at times in terms of where we've, ultimately we need to be, I think, geo-economically pragmatic, whatever that means. Whether it's Africa as our own economic neighborhood we need to capture. And again, our primary competitors in many industries, think construction, infrastructure, in sub-Saharan Africa are the Chinese. So how do we balance the geopolitical imperative, which we clearly have, with the commercial competition? And I don't think that's something internally as a country we've figured out.
There we go. We'll leave it there. Dr. Martyn Davies, thank you very much.
Thank you, Bruce.
As always, information dense, and you'll be able to get this as a vodcast on our website tomorrow. So you can watch it all again, twice at least, to absorb everything that Martyn Davies, the Managing Director of Emerging Markets and Africa at Deloitte, had to say this evening. There'll be more Africa-China business and other economic issues looking at the future. Of course, for now, though, it's good night.